Good morning, all. So, as far as last week was concerned, last week kind of actually went fine. Okay. And this week, right now, the view that we have is okay. Based on data. And this is the reason. Yesterday we actually had we would have actually had a tough time if market dropped further, right? Good that we exited early. I know some of you, most of you, not some of you. I guess almost 99% of you were actually doing virtual trade. Okay. So I personally had cut it at a 1.3% as shared at Discord yesterday. Now, if we had actually held it towards the end, what could have happened is for some point of time, the price actually came down below our break even. That would have given us a big panic. Okay. So that would have actually happened yesterday. So first, I'll just start off by taking out Obsta. So meanwhile, I was also working on some data. Okay, that is, I'll show you that also. Okay, it is on a different system. Okay, I'll share the PDF then. Okay, just a second. So talking about, okay, take it on a different screen. Okay, so talking about, we will start off by yesterday's hand condor itself, how it expired. Now, the reason I'm doing this is because some days, like when today I don't have any directional trades, I don't have any directional trades, I haven't taken any positions today. So there could be days when you really don't have any idea about what direction the market could kind of be moving, etc., etc. So those days, like if we have, so our trading style should be a mixture of both directional as well as non-directional. That is what I feel. So non-directional that you do with like very less profit potential, but almost every single week you're capable of doing that. Okay, so here in this particular challenge, we're looking forward to capture a 40% ROI over the complete year. Okay, so I guess it's just loading. Yeah, so this was the one. So this was the one that we actually were discussing on. So this was the encounter that we had actually done, right? Isn't it? What do you feel? Wasn't this the encounter that we did? Just a second. Yeah. What do you feel? Was this the encounter that we did, or something else? Okay. Now, could you please tell me why? Okay. Could you kind of actually please tell me why you see a different value over here? So why is there a difference in values that is being shown over here? So what is the encounter that we did? So why are we not receiving any response? Was it the same? Was it this one? Or was it this one that was discussed? See, if you're new, please don't attend this. So was it this one or was it this one that was discussed? Okay, you just join now. See, if you join now, it is fine. See, what I'm asking is, which were the setup that we were actually watching out for? I just wanted to know, like, how many of you are kind of watching out for? How many of you are kind of actually watching out for? Okay, so the first one itself, you're right. Okay, so people who mentioned the first one, yeah, you're right. It was just the first one itself that we saw. And you would realize that our profit actually came down. Okay, towards the end of the day, our profit actually came down. However, because of the fact it didn't fall below our break even, we didn't go in loss. Okay, so there was a point of time when the price actually slipped below our break even also. Someone who would have paper traded would have noticed that. Okay. However, like we were capable of exiting the position somewhere over here. So we exited our position somewhere over here. So towards the beginning of the day. Okay. So towards the beginning of the day, what the thing was, we were actually having a pretty wide range, and we were up by almost 1.5% at the beginning of the day. Okay. So at the beginning of the day, we were kind of actually up by almost 1.5%. It came up to almost 1.62% also, 1.6 to 1.7% also came. Then only towards the end that huge drop happened. Now, something I just wanted you guys to notice is, so this, I'm speaking all these things so that even someone who's starting fresh gets to know. Okay. So when we started off with our setup, okay, when we actually started off with our setup, you would have seen that many of you asked regarding the payoff graph, right? So as we started off with our setup, you would realize that the blue line was actually kind of below. Then gradually, as and when theta decay starts happening, the blue line, as the days to expiry keeps approaching, the blue line starts going inside. So here, what we are kind of looking forward to capture is just nothing else but the theta decay, and we are looking to cash in on that. Now that let's talk about the day before that. That is on Wednesday. So what did we see on Wednesday? We had a 200-point drop in Nifty, and that was a time when our iron condor, which was earlier in a profit of around 0.6% on Wednesday morning, it went into a loss of almost 0.66% towards the end of the day. Now, something scary that we had is if market manages to have a big gap down the next day, when we our lower break even would be taken out, just because we actually have a downside range of only 200 points. I have seen of loss of 2000 in MTM on paper trading. After expiry, it came into profit. Why? Because market dropped down a lot, then it picked up and kind of closed above our break even. So that is why you saw it in profit. So what is the lesson that we kind of realize over here? So what is one lesson that we kind of actually realize over? I guess you can see my screen. Am I right? Yeah. So what is the lesson that we realize over here? So one thing is, yesterday that drop or that kind of anticipation, like or towards the end of the day, almost every one of us was having, okay, something strange is happening at market. So what should we do when something strange is happening in the market? So lesson number one, if you have a feeling something strange is going to happen, or something that is going beyond your expectations is happening, what we could do is come out, just exit out from the position. If you have a view, okay, something strange is happening. So first you were having a profit of around 1.6%. Don't let that profit go away. See, here we are looking forward to capture small gains. Our maximum profit potential was 1.82%. And we had realized something like a 1.6. Okay. So even if you're paper trading, do something. So once you have captured a 1.6%, you realize, okay, something strange is happening. Market is giving a sharp fall and it could potentially go below your break even. Better not to stay in that rate, come out of it. Okay. Then I personally feel one more thing that you would have observed is, on Wednesday, even when market gave a 200-point downside move, we went to a loss of only 0.6%, right? So the MTM fluctuations was also not so rapid. Like we realized that, okay, because we got some decay on Tuesday, the way at which we were gradually getting into loss was also slow. I think you would have seen that the way our the way we were getting into loss was kind of actually slow. That is, you would have got some time to think and exit. Okay, so I just wanted to know your response also, what you felt about it. So the way it kind of actually went into loss was also kind of a bit slow. Okay, now right now I'll just show you how the let me just let me just show you the option chain and open interest for the monthly expiry. So this week we have the monthly expiry, and something that I kind of realized is, when we were checking back earlier, we kind of saw that the call writing was taking place at a nearby level. So right now, if I have a look, so I personally think that on the put option side, okay, so having a look at the open interest, I kind of actually realized that we have some pretty good operators that are staying at 14,500. Okay, so followed by that comes 14,000 put option. Now talking about the call side, there is very active writing happening at the 15,000 call option. Okay, and followed by that comes the 15,500, which is very far away. Okay, so let's quickly have a look at the max pain. So currently max pain is at 14,600 and spot price is trading at 14,554. Okay, so what kind of, like, our markets has been a bit bearish recently. Okay, and what do you say? I personally don't want to keep a sell. I don't want to sell on the downside. Rather, I'm specifically interested only in selling the upside. Okay, so let's think about developing a setup, not exactly an iron condor, but let's kind of actually think about developing a setup where we start, where we kind of actually start by selling a call option and keeping a hedge for the call option. And if the market is dropping down, we would realize our 1% profit pretty soon. Now, if market is picking up, we'll convert this into an iron condor. Okay. So right now, at this point of time, I personally observe that we can actually deploy this setup by having a 600 point or 700 point range on Nifty. That is 700 points away. Also, you can actually deploy a setup where you can look forward to capture like a 1.5 or 1% anyways. Okay. So let's synthesize that. So click on option strategy builder. I will request you also to try this out. Okay, if you want to have a look at the option chain, let's do that also. So option chain Nifty 25th March. Okay, so over here, like if I just have a look at the operators, that is, so right now, like if you have a look, the 14,000 put, this is kind of staying the same, like much of a variation is happening. So okay, yeah. So operators, if I check, I realize that okay, on the downside 14,500, as I mentioned, a very good operators was there. Followed by that comes 30 all these things, 31,000 at 14,300. Then comes 14,000 put option, but I don't want to take a chance on the downside. Okay, so how many of you feel that market would actually pick up above 15,000 the coming week? In 1 week time, how many of you feel market could actually pick up above 15,000? How many of you feel market could actually pick up above 15,000 the coming week? Okay. Okay. So what about others? It might pick up. Okay. It's trying to take support today. Yeah, we kind of actually see that the market is actually trying to take a support. Now let's quickly start off by marking some levels on the Nifty chart itself. Just quickly have a look at Nifty itself. Let's try having a look at it. See, usually I don't kind of do setup for what do you say, the next week on Fridays, but usually it is on a Monday afternoon or a Tuesday afternoon that I deploy. But today I personally think that if market is to drop a bit down, I can exit out from my position. Okay, and so let's have a look at Nifty. Okay, so what are the nearby levels on Nifty? Let's mark on the daily time frames. So let's mark the daily levels on Nifty. So there lies a level at like this, like there lies a significant level on Nifty at 15,300, right? Just mark it over here. So 15,300 there lies a good level. Okay. Now, let me just get into the 1 hour time frame too. See, I'm just concerned about the upside. I don't want to define the range on the downside. Okay. So apart from that, we see, okay, 15,000 looks like a good level. And so these could be the two like significant levels that I can actually see over here. So how many of you feel market could manage to pick about 15,200 now? How many of you feel market could manage to pick about 15,200 the coming week? By the coming week, how many of you feel market could actually pick above 15,200? That is, for market to pick above 15,200, it should actually move by, what do you say? It should pick up by 700 points. See, I'm asking you why nobody is answering. How many of you feel market could actually uh, Tuesday, maybe market could pick up above 15,200. That is market picking up by 700 points. Okay. I think it is unlikely. Okay. Why? Because 700 points, I don't think market, that is from here to going about this, I don't think it is kind of possible for the markets in 1 week's time. Okay. That is from this Friday to next. I don't think it is actually possible. So what I'm going to do is, once again, I'll just take out the option chain and let's quickly have a look at the open interest that is staying. So 15,000, we see there is a huge open interest of 54,000 staying at 15,000. Followed by that, then the next major hurdle is at 15,200, 30,000 open interest. So what I'm going to do is, I personally think I have a view market is not going to move above 15,200. So what I'll be doing is, I'll click on option strategy builder. Okay, I have done it already. So what I have done is, anyways, I'll show you. So 25th March, I have a view market is not going to move above 15,200. So what will I do? I'll select the 15,200 strike. I'll sell this. So what is my margin requirement? 1.12 lakhs. Okay, and my maximum profit is a 0.87 percentage. If market manages to stay below this. Okay, so what if market is picking up above this? If market is picking up above this, I'll go in unlimited loss. But as far as I'm personally concerned, I won't go in unlimited loss. I have investments. So investments will definitely appreciate. So I'll be getting the appreciation from 14,500. The 700 point move on Nifty appreciation, anyways, I'll be capable of capturing. But I don't want to take or sell this naked. It is not a good practice. So what I'll do is, so 15,200 I'm selling. So let's try two different combinations. So let's think about buying the 15,400 call option. Okay. So let's think about buying the 15,400 call option. So what becomes your maximum profit? So your ROI becomes a 1.37 percentage. So anywhere market settles below 15,200, the coming expiry, you make money. You make 1.37 percentage anywhere the market actually settles below 15,200 the coming week. Okay. Now, let's say that the market is dropping down. Okay, so as the market drops down to, let's say 40, let's say, okay, I'm not telling you market is going to drop down, but let's assume market, all of a sudden, let's assume market is making a drop to, market is kind of making a drop to yesterday's levels of 15,300 something. So do you think you'll make profits? Yeah. So if market is actually kind of making a huge drop to, let's say, 15,300, so then itself we would have actually made something like a 0.6, 0.7%. And if it drops down to some 14,200, our maximum profit has already been realized. Okay. You can see how the blue line is changing. We would have kind of taken some good profits. And we can think about shifting down the call option sold. If we started by selling the 15,200, if market is dropping down further, we can even sell the 15,000 call option. Now let's say that market is actually picking up. Okay, let's say market is picking up. So usually what range do we give for our iron condors? Just think for yourself and just tell me, usually what range do we give for our iron condors on average? On the upside, what are the usual range that we give for iron condors? Come on, friends, please tell me what is the usual range that we give for iron condors. So minimum 500 points. So not 500. So on average, what we kind of actually give is something like a 400 points. Okay. So a 300 to 400 points would actually do the job. Now, since you asked, I'll just show you. I'll just quickly show you a back test that I did on iron condor itself over the last 2-3 years. Just a second. And see, everything should have a reason why we are doing it, right? So that's why I'll just show you. Yeah, so on Monday we give a 400. Yeah, that's a good point that you have mentioned, Akib. So Akib, yesterday how many points you captured? Like what ROI were you capable of capturing? Cool, 3%. Okay, your range was pretty tight. Okay, so I'll just show you something. So so this is a very useful site. So I use this. Okay, so if okay, so this is a 200 point spread iron condor. So these are the results. So from 2019 to 2021, even when the market was crashing. Okay, so I'll just show you. I'll just run the backtest and show you. Okay, so what here we are doing is, here we are keeping our range, we are confining our range to 300 points on top and 300 points below. Okay, so whatever is at the money strike, we'll be selling 300 points away strike, 300 points below strike. We'll be protecting it by a 500 point hedge on top and below. Okay, so what we kind of actually realize over here is we are defining our maximum loss to 2K. I told you at any point of time you have a 5% MTM loss. You come out from your position. So what is 2,000 rupees for a 60,000 margin requirement? So what is 2,000 rupees for a 60,000 margin requirement? Just check for yourself. So here what I have actually done is, in this particular case, this particular case, what I have actually done is, I have just defined my maximum loss to 2K, which is actually around the 3.5 percentage, right? 3.3 percentage. Okay, so we have maximized our outflow or maximum loss to be 2K. So any point our profit reaches 1,000. So the condition I have given us, we'll lock our 600 rupees profit, will lock in. That is, anytime we have reached 1,000 rupee profit, we'll never go in loss. If the price come, if our profit MTM comes down to 600 rupees, we'll exit. So that is the condition I have given over here. So we realized that over the last uh, Feb, yeah. So over the last 2 years, we could have gained the 26,000 from this particular strategy. That is like a 50% ROI. Okay, even when the market is kind of pretty unstable. But what I was telling is, like, if we can do adjustments, we can make our ROI much better. So accuracy also, we can see how many win days, how many loss days. So just download this PDF and share with you also, so that you can also refer. Okay, I'll just save this so that you can also refer. I'll just share it with you on Discord. Okay. So now, see, I don't know if this meeting is getting lengthy. I just want you guys to understand everything completely. Okay, I'll say that and share with you. Now, I just wanted to ask you this question. What will happen if market is picking up? So we know that 14,500 is the current price, and we kind of actually realize that market could actually end up, if market is picking up, what will happen? What will go wrong if market is actually picking up? So what will actually kind of go wrong if market is actually picking up? So what will you do? What will you kind of actually do if market is picking to, let's say, 14,600 or 14,800? That is only 400 points is there to your break even. What can you think about doing? So right now our maximum profit potential is 1.38. Okay. So if at all market is kind of starts developing a bullish outlook, okay, or let's say market is picking up, so what I'll kind of consider doing is, I probably would sell the 14,000 put option. So which is where there is maximum open interest. So I'm not doing it right now, but if market is picking up, I probably would consider selling the 14,000 put option. Probably. Okay. Once again, I'm mentioning right now, no, right now, our view is bearish if market is picking up. So you see there is a premium of 52 over here. Okay. So even though there is a 500-point range below. So if market is picking up, let's say market is picking to some 14,700, 14,800, something like that, where our break even is at 15,200, still we have a 400-point range on the upside, then I'll kind of think about considering selling the 14,000 put option. So this values won't be right, and I will keep a hedge for that, maybe at 13,800, where I look forward to decrease my loss on the upper side as well as increase my ROI on the deployed capital. Okay, so I will look forward to increase my ROI on the deployed capital as well as reduce my risk on the upside by collecting more premium if market is turning bullish. But at this point of time, I don't think there is going to be any possibility that market is going to pick up above 15,200 by the coming Thursday. So this is my personal view. So we see that our maximum profit potential is 1.38 percentage, and the margin requirement for this is 35K. Okay, so I'm considering to deploy this by today, like maybe 1 p.m. or something before I leave for lunch. So I'm just thinking, I'm just kind of just checking out if market can actually once again pick up to the day's high or capable of breaking above the day side, we could actually deploy this by collecting more premium. Okay, we could collect a bit more premium, I feel. So just wait for some more time and I'll deploy this. So this is the logic. Okay, see, this is not an iron condor. Okay, so this is what we call as a bear call spread. Okay. So this is what we call as a bear call spread. What do you? So bear call spread. See, iron condor both sides we do, right? Bottom and top. So here we are doing only the top side. We are selling the nearby call option. We nearby strike we are selling. So more out of the money strike we are actually buying it as a protection. That's it. Okay. So anywhere market settles below this 15,200, we'll make money. Anywhere market settles, our profit is going to be the same. Anywhere market is going to go, our profit is going to be the same 1.3%. Okay. Yeah, we are not doing iron condor. We are starting off with this. We are starting off with a bear call spread. Now, if market picks up, let's say market is picking up to some 14,800, something like that, or something like that, market is picking to maybe 14,800, something like that, then we'll think about converting this position into an iron condor, where we'll sell put option, we'll buy a hedge for the put option that we sold. We can convert this into an iron condor, right? So you will start off with this. Only the upper side of an iron condor is there. At any point of time, we get okay, market is picking up. We'll convert into an iron condor. But I don't think we'll have to do any conversion. Most probably, we'll stick with this only. We can look forward to capture like a 1% from this. Got it? Because I don't want to take a risk of selling the put options right now because market has been pretty unstable over the last 1 week. So I don't want to take a chance. So that's the logic. So I hope everybody gets it, and I guess everybody is understanding the strikes that we have selected, the way at which we have looked at the open interest, the way at which we have looked at the levels on Nifty as well. Okay. So any questions you have, please ask. So only if market is picking up a bit, we'll convert this into an iron condor. Until and unless that is happening, we won't do. So we'll start off with this. We'll start off with this bear call spread. Then we'll think about this is called bear call spread. Yeah, bear call spread. This is called bear call spread. No use in understanding the names. Understand the logics. Okay. So you see, okay, risk reward is very unfavorable. So once again over here also, if I here at any point of time I realize, like I kind of actually realize that I'm taking a huge loss of let's say a 3% on my capital, I'll cut out my position. But I personally don't think at this point of time there is nothing much for me to worry on. Okay. So any quick questions you have, please ask. So this is something that we are getting started with. We'll convert it into an iron condor at a later point of time. Can I speak? Yeah, why not? Yeah, please go ahead and ask your question. Hello. Yeah, Chaitanya.
Hello.
Hi, Chaitanya.
Hi, sir. Good morning.
Okay.
Yeah. So I have a doubt. Like, so you have back tested on Opstra, right? That is for intraday, right?
No, no, no.
Or using iron condor.
See, this is not Obsta. This is a
No,
site
no, sorry.
stock market.
Stock market. Yes, yes.
No, this is
Yeah.
not for intraday. This is for positional. That is week to week. So I'll show you over here. See, this is a very cool site. I would highly recommend you use it. There is the free. First, you get a free thing, and if you have anything to check out, I'll be more than happy to do it for you. So I have the paid version. Okay. So I'll be more than happy
Okay.
to do it for you. If you have some very good, sensible strategy to check out, just let me know. If needed, I'll do it for you. Okay. So here, like I have
Sure,
given
sure.
the conditions as we enter. Where is it? Just a second. Okay, say you want to check out iron condom. So here, if
Yeah.
we want to give a condition where I want to enter just a second. Yeah. So here positional is there. I want to enter 3 days before expiry. I want to enter 4 days before expiry. I want to exit 0 days before expiry, or I want to exit 1 day before expiry, 2 days before expiry. Everything I can backtest. Okay. Now let's try this. Let's try this bear call spread. Chaitanya, I have
Yes,
never
sir.
backlisted this bear call spread. Okay, shall we do that now?
Okay.
Okay, I'll show you that.
Sure, sure.
So let's click
Yeah,
on
sure.
call spread. So right now we are selling the strike that we are selling is 700 points above, right?
Yeah.
Yeah. The strike that we are selling is 700 points above.
Yeah.
Let's select that. And the protection that we are buying is 900 points above, right?
Right.
Now let's say that I'm doing Nifty. Okay.
Right.
Now let's say that I want to enter on a Friday evening. That is today, Friday afternoon. Okay.
Yes.
Friday. That is. Let's enter. Let's keep one
Yeah.
o'clock. Okay, our entry.
Sure. Sure.
And I want to exit on the expiry day only. Okay, 4 days before expiry, I'll be entering, and I'll be
Right.
exiting on the day of expiry, or I won't be exiting it. Okay. So
Okay.
let's keep a stop loss for this. Let's define my maximum loss to be 2k per set. So
Okay.
this is one set. Okay, 2k per set is my maximum stop loss, and maximum profit. Let it run. Why? Because our range is pretty wide, and let's backtest it for the last 2 years.
Yeah.
Okay, and positional. Yeah, start backtest. So I realized that I would have taken a loss of 19,000. Okay,
Okay.
19,000 I would have taken a loss. Okay, so maximum profit I would have gained is 3,030. Maximum loss I would have taken is 11k. So maximum winning streak is 21 expiries. So even though this setup is having an accuracy of 80%, still I'll be taking a loss of 19,000. So what could be going wrong over here? Could you please tell me like what could have actually gone wrong over here?
So we have got
Okay,
limited profits. Yeah.
yeah, something wrong happened. Like the strikes that we selected actually changed.
Oh. Okay.
Just wondering what went wrong. Just a second.
Yeah.
Sell. Okay, there is a limitation.
900
There is a limitation. This I can't actually shift my
go
strikes.
beyond the 500. Okay.
Okay, that is like my range is pretty well defined where I'm selling only. I can kind of actually sell only till 500. I can't go beyond that. Something is wrong over here. Okay,
Okay.
so I'll do something. Let's think that we are only selling the call option. Do you want to see? So that will help us and get an idea, right? We are selling only the call option.
Yeah. Yeah.
Okay, the 500 points above call options we are selling. Only call options we are selling. Let's try
Okay.
with this then.
Sure.
So naked call we are selling. What will be the results? Because these values that we see is a mistake, guys. So as you saw, okay, 900 points range was not. We were not capable of taking that. I guess they don't provide more than that. But iron condos, our range is pretty fine. Why? Because we are set 300, 500. That is enough. Right? 200 points difference. Just check this out. Okay, so here I see that okay, I'm kind of selling 500 points above. That is the maximum that I can do. Okay. Selling 500 points above is the maximum that can be done, and I get an accuracy of 87%, 11,000 rupees profit. But how many points above are we selling right?
Only 500.
Yes, there's 500, but
Yeah.
here we are selling 700 points above. So what do you think
Yeah.
about
Yeah.
the probability?
Yeah. It will be more because
Probability will
actually.
be actually much higher, right?
Yeah. Yeah. Yeah.
Why? Because we are selling another 200 points away.
Extra. Yes. Yes.
I just want to see if we can backtest it somehow. Uh, I think that is not possible. Like at max, we can go for a 500 point. Okay,
Okay.
anyways, no problem. Enter by premium range. Okay, anyways, you get an understanding that okay, if we just go for selling like a 500 point away, still we get the results, right? Then
Yeah.
all these things can be used. So whenever we are kind of actually just doing a strategy, so along with your view, you could think about things like this also. Okay, here I have like uh, almost a 650 point range on the upside. So only if market picks up by 650 points the coming week, I'll go there. Okay. So I think that is a pretty wide range and that is good enough for deploying this for the week. And we can actually convert this into an iron condor if market manages to pick up by selling a put option as I have mentioned. Fine. So I
Okay.
hope you get that. So as I deploy this, I'll update you. So just wait for the market for the day. Like let's see what if some sort of a violent
Sure.
is happening. Uh, let's say a market is capable of picking towards a day side. So we would be capable of deploying with a better margin requirement, with a better margin. Like we would be able to capture more points. That's it. Okay. So I'll just wait. I'll update you once I deploy. And this thing, as I mentioned to you, we'll think about converting into an iron condor if market is picking up. But we'll start off by a bear code spread. Fine. So I hope all of you had a great understanding analyzing the iron condor over the last week. Why? Because we had two continuous days when market dropped on 200 points. Still, we were capable of coming out at profits. Right. So that is one good thing that you have when you keep or look out for smaller profit expectations. When you check out for a smaller profit potential, that is okay, 1% ROI, people are not attracted towards it. Why? Because everybody looks for a higher ROI. But when you bring down your ROI, you can do it more consistently, even when the factors are kind of against you. Okay. So I hope all of you realize that over the last week. And thank you. So this thing, as I deploy it, I'll update you. So I'm just waiting. So once I deploy it, I'll update you. Thank you. So any other questions? Any questions you have? Approximately how many points are you waiting for Nifty to pick up to change to an corridor? So I personally feel like if market is capable of picking up above this particular point, that is above the 14,900 marks, I probably could think about converting this into a iron corridor. Okay. So thank you. I'll just wind up for the day.